Happy Friday, everyone. Welcome to the webinar. Thanks for joining us. We're sorry about that delay. We have our special guest here, Rachel Michaelov. She's going to talk to you about your business, small business owner. So I'm going to turn the floor over to her. She has a presentation, and then she's going to answer any questions that you guys have. At the end of this presentation, everyone that is still present will be put into a nice drawing, and you could win Sam's book, Mastering the Art of Success.
Wow.
So this is exciting. So having said that, Rachel, I'm going to let you take over.
Thank you, Melissa. Thank you. So I'm going to share my screen and share my presentation, okay? So I'm going to put that. It's my first time doing a webinar, so just let me know if I'm doing something wrong. But I have my PowerPoint.
No problem. There's going to be like a 3 or 4 second like intermission when you change the screen share, so don't speak during that time until the screen's back up.
Got it. Okay, just let me know if you see my screen, please. Do you see it?
No, not yet.
Okay, 1 second.
Okay, now we see your screen.
Okay, perfect. So I could start?
Go for it.
Okay, so hi everyone. My name is Rachel Michaelov, and I am a licensed enrolled agent. I'm licensed by the IRS, and I am a small business tax expert. I help lots of business owners with whatever they need, and I'm here to offer lots of value and help you with any tax questions that you have. So my topic today is tax tips that will help you reduce your taxes and audit risks, because that's the 2 top things that most business owners really want. They don't want to get audited, and they want to do everything that they can to save money on taxes. I have to, by law, I'm required to state a disclaimer. This material is meant to assist you in thinking about legal issues that may come up in starting or running your business. It is not legal advice and does not substitute the individual and specific advice of a lawyer and accountant. So this typically means that if you have a specific situation, please ask me, either after this or ask me live, whatever works. But every single situation is different. And, I'm going to give you lots of general advice, but a lot of advice that you can apply immediately. So how will we help you today? We're going to find you best ways to help you reduce your taxes and then reduce the IRS red flags on your tax returns. So about me, like I said, I'm a small business tax expert. I'm licensed by the IRS, and it's not about me today. It's about you guys to help you. Okay, so tax tip number 1. Today I'm going to talk about entity selection. So a lot of business owners, specifically that deal with e-commerce, they're always wondering what entity they should be. Should they be a C Corp? Should they be an S Corp? Should they be a single member LLC? Should they be a multi-member LLC? And I'm going to give you a little bit of every single entity really quick. So a lot of business owners think that they should be a single member LLC. And I personally don't like single member LLCs because you pay the most taxes when you're a single member LLC, and you have the highest risk of being audited. So if you are making less than approximately $30,000, then it would make sense for you to be a single member LLC because the tax savings is not that much. If you're making approximately more than $30,000, then I would recommend an S Corp. An S Corp is a separate entity where you don't pay any federal taxes. You pay 0 federal taxes. You pay a minimum to the state based on your gross revenue, and you file a separate return for the corporation. The corporate form that you file is called an 1120S. Now, there's a C Corp as well. C Corps are always double taxed, so that should not even be an option. Again, depending on your specific situation, most business owners, specifically for e-commerce businesses, are usually not a C Corp. And the way you know if you're a C Corp or not is if you look at your return and see an 1120. If you just see an 1120, that's how you know you're a C Corp. If you see an 1120S, that is an S Corp. If you see a 1065 form, you're a multi-member LLC. So one of the best entities I would recommend if you're making more than $30,000 and you're doing really well, I would recommend an S Corp only because you save the most in taxes and you have very little audit risks. I have clients that make $300,000, $400,000. And I see, they go to other accountants, let's say, and they came to me after they reported approximately $300,000 on a single member LLC, and they're being audited. And one of the reasons that they're being audited is because of that entity. So I don't recommend it. And, again, there's a higher audit risk. So, okay, I hope I answered that. Is that okay?
Yes, but we have one question in the chat. When you said making before, did you mean, is that profit or revenue? When you said
gross. So before expenses, $30,000. Because if you make if your gross revenue is approximately $30,000, then your expenses are probably really high. Specifically with Amazon, you have purchases that you're purchasing, and the IRS may say, "Why do you have so much purchases?" They really look at in single member LLCs with a magnifying glass. And when you get audited on a single member LLC or a sole proprietorship, they want to see every single receipt. And they want to see, proof of the business purpose. They're really strict. I've been doing this for 12 years, full time, every single day. I prepare about 1,000 returns every single year, and I've barely seen an audit on an S corp. And if there is one, they may look at 2 or 3 items on the S corp return. On a single member LLC, they're going to look at every single item. They want Amazon receipts. They want PayPal fees, and it's a really big headache. Even if you have every single backup, no one wants to go through an audit. It's just annoying. Can I go to the next slide?
Yep.
Okay. So tax tip number 2, I would recommend, even if you're a sole proprietor or or if you're not even established, always open a separate business account to pay for your expenses. You want to deposit all of your income into the separate bank account, and you want to pay for all of your expenses from one bank account. Now, many clients ask me, what if I have a credit card and it's under my personal name? Can I use that for business? Yes, you can. You could have a separate credit card under your personal name. It does not need to be under your business name, but it has to be used only for business purposes. So if you get audited and the IRS asks you, show me documentation for your, transactions, you would print out your business bank account, and you would also print out your credit card bank account, and they only want to see business transactions on those credit cards. If they see that you went to Florida or a personal vacation, or they see lots of meals on there, they're going to automatically think that you're commingling your accounts, and they would assume some of your business expenses are personal. So be very careful. And by the way, guys, a credit card transaction or a bank statements are not enough to prove your expenses. You need to have backup. You need to have physical receipts. And most of entrepreneurs like myself, I always buy things online. So just save it as a PDF, and you don't need physical copies. You don't need to print anything. A folder on your desktop or Dropbox, whatever, will work. So keep accurate records of all income coming in, keep accurate records of all expenses coming out. And at this time, normally, a lot of people also ask me, what if I don't make any money? And, I started my business, and I deposited $5,000 into my business bank account. So you have to remember that is not a income. That's a loan. That's a loan from you to the business. So if you deposit, $5,000 from your personal W-2 job, I would never recommend that, because then you're gonna you're going to screw up your income at the end of the year. If you want to transfer personal funds into your business account, I would recommend this situation. Deposit the W-2 income into your personal name, and then make a transfer from your personal name to the business account. So at the end of the year, if you do your bookkeeping at the end of the year, you're going to know, that transfer from my personal account was a loan to me, to the business, and it was not income. I hope I explained that right, because a lot of people mistake deposits that we personally make as income, and then they over-report their income and pay more taxes than they should.
Rachel, we have a couple of questions.
Sure.
What What about two-member LLC with S corp election? So they're kind of going back to the business structure.
That's fine. A multi-member LLC with the S corp election is fine. And you would need to pay yourself on payroll, but that's a really good, because that's actually the best, because you have the LLC. And by the way, I'm not a lawyer, but you have the LLC protection, and you have the S election tax status, which is perfect. That's actually great.
And then the next question is, do you have the same protection of an LLC with an S corp?
Yes, you do. I'm not an attorney, but as far as me speaking to other attorneys, yes, you do. And a lot of people think, am I being protected? Your personal assets are being protected, but you always need to remember you need to have insurances other than your corporation. You need to have, like, I don't know, liability insurance or whatever. Like, you would need to go to an insurance agent. Don't think that because you're incorporated, that is going to protect you, or that's going to be enough, for people suing you or whatever. That won't be enough. It's just going to protect you from, if somebody wants to sue you and they want to run after your personal home or your personal car, they can't do that. That's how that protects you.
And then the last question that we have right for now is someone asked that they said that they transfer from savings. Is that okay? And I think
Yes.
that was in regard to the loan.
Yes, that's fine. As long as there's an indication in the bank statements saying transfer from account ending 4759, whatever, and you know that's your savings account, at the end of the year, do not include that as income, because that's not income. You already pay taxes on the savings money. Does that make sense?
Yes.
Yeah, it does.
Okay, good. Okay, because like I had a client who recently came to me, and they reported an extra $30,000 of income, and she's like, I didn't really make $80,000. This can't be. And they went over, we went over all her bank deposits every single month, and I said, and when Amazon deposits the money into your account, because it says Amazon, it says eBay, it literally says where it's coming from. But then she went to the bank account and she made cash deposits, and she was unable to, and I guess her accountant just assumed that was income. I don't know. And she overpaid money on her tax. She overpaid money on taxes because the accountant assumed that was income. So it's your responsibility, and we always do this as for our clients, to always look at the income report. Don't always assume that, if you made $100,000, don't always assume that sounds about right. Look at every single transaction, look at every single deposit as well, and confirm that the income is correct.
And then one question that came
Sure.
in, when I pay the money back, how should I do it?
So you could pay the money back and write a check called loan payback, and then let's say you made a deposit on January 1st for $5,000, and you want to pay it back in April. So I would pay it back I would pay back $5,000 back to the same account for the same amount, and on the memo say loan payback dated January 1st. So there's a paper trail. So when us accountants, we see $5,000 coming in, $5,000 going out, it's a wash. Is that okay?
Yes.
Yes, that is perfect. Thank you.
Okay, you're welcome. So next, tax tip number 3, know your business expenses. I've been reviewing so many returns in the past, specifically entrepreneurs, and I am just shocked to see, the return, the expenses, because a lot of entrepreneurs, they do their taxes themselves, and that's okay, but at least know your business expenses. Know what you're able to deduct. I reviewed a recent return, and his office supplies were so little. He didn't even deduct a portion of his home rent. And entrepreneurs, you have a lot of expenses that you could deduct. And if you want, actually my next slide states what is deductible. A business expense is, sorry about that. A business expense is anything that is ordinary and necessary for your business. That is, that's deductible. So a lot of Amazon, they have Amazon sellers. You guys have a lot of PayPal fees, a lot of merchant fees. You work from your home. You're mainly mobile, so you have a lot of travel. I don't know if you travel, but you have a lot of purchases. So anything that is that is going to help you grow your business is deductible. You also have like a lot of these continuing education courses that you take. The fees that you paid to Sam Cohen is deductible as well, because you need it. It's like a college education. You need that in order for you to do well, in order for you to make money. And these are some of the expenses that are deductible, such as rent and insurance, advertising, telephone, internet expense, repairs and maintenance, any kinds of supplies or materials purchased for the business. And remember, the most important thing is, I mean, accountants know what depreciation is, but if you're going to be preparing your own return, you are not allowed to deduct a computer, for example, or a fixed asset, which means, so let's say a computer, according to the IRS, it has a life of 5 years, and the IRS does not allow you to deduct $1,000 computer in 1 year. They expect you to break it down into 5 years. So every year you could deduct $250 because you're going to be using that computer for 5 years. Now, there is something called Section 179 where you could elect to deduct the whole thing, but you have to be very careful and you need to know what you're doing with that. Any questions in regards to business expenses?
There's a slight delay, so we'll wait like 30 seconds or so to see if anything else comes in.
Okay, so I should just continue, I'm assuming, right?
Yes.
Okay, perfect. So non-deductible expenses, and a lot of people, laugh at this. Fines or penalties are not deductible. Violations are not deductible. You're not allowed to deduct any of those expenses. So don't think, oh, I'm going to get a ticket and then I could deduct that. Nope, it's not deductible at all. So just be careful from that. Next, tax tip number 4, keep track of your business expenses. Keep track of your income and expenses monthly.
We did have a question come in, Rachel. I'm sorry.
Okay, no problem.
So someone said, so for example, $5,000 paid for ACE membership. Once that is deducted, what is my net cost for that?
What does he mean? What do you mean by net cost?
I'm guessing in order to write that off for her taxes, maybe?
So if she deducts $5,000 for the Amazon membership and she deducted on the return, which reduces her tax liability. And I'm assuming she wants to know how much of a deduction she gets maybe, and that's based on her tax bracket. So if she's at a 10% bracket, she's allowed to deduct the 10%. Like, you don't get a $5,000 refund or you don't get a $5,000 deduction. It's the percentage of it's basically the tax rate of the expense. So let's say, for example, you're at a 10% bracket and you buy something for $1,000, you get a $100 benefit, if that makes sense.
Yes.
Okay, so it's based on your tax bracket and everything, and it depends on like how many kids you have on the return. It depends on your mortgage interest, your real estate taxes. It depends on many things. And when we prepare the return, we're able to see the numbers going up or down. Okay?
Okay, that's good.
Okay, perfect. So keep track of your income and expenses monthly. And most business owners, they think that they need QuickBooks or they need Xero or Wave. They need like some special computerized software. And I don't recommend it. I recently went to an audit where it was a 2014 audit by the IRS. The IRS was auditing this real estate agent, and the IRS this real estate agent had like all of these softwares, and she was a lot older. She didn't know what she was doing. And then the IRS she specifically told me, and she said, we accept paper and pen. I mean, I don't recommend it. You could use Excel as well. You could use, you don't need a fancy software that you need to spend a lot of money for. Especially if you're making less than $30,000 to $40,000, I always recommend for business owners to print your statement at the end of the month and really understand if you're profitable or not. Understand how much money you're making every month. What are your expenses according to IRS categories, which is right here. Okay. And just know, is your telephone too high? Is your purchases too high? Are your Google AdWords very high? What exactly can you do to reduce the expenses so you can be profitable? Also, a lot of people come to me at the end of the year and they're like, I have, I didn't know that I was paying $3,000 a month for Google AdWords, and they're making so much money. And then it's just too much at the end of the year to go back. You can't even go back 12 months and dispute it. There's also a lot of bank fees every single month that people don't pay attention to. So every single month, I would always recommend keep track of your income and expenses. You don't need a fancy software. You just need, you need Excel. But if you're making more than, $50,000 to $60,000, you should hire a bookkeeper, or even $100,000. You should hire a bookkeeper because you want to make more money and you don't want to do the bookkeeping. But even if somebody else does your bookkeeping, you want to review those numbers. Don't ignore your numbers just because you delegate it to somebody else. I hope that makes sense. Like, review your numbers, review the profit and loss reports, and review the detailed of those reports every month. So important, like I said, review your numbers every month. I really, believe that it's really important because there's so many people that come to me that are at a huge loss and it's too late to go back. Okay, sorry, I'm right here. So tax tip number 5, know your payroll laws, dates, and fines. So if a lot of you are from New York, and I don't know what state you're from, but for payroll, according to the IRS, you need to file your payroll returns every single quarter, every 3 months. So from January to March, your deadline is April 30th. And April, May, June, the deadline is July 30th, every 3 months. And for New York State, the penalty is $1,000 every single quarter for not paying yourself. Now, I also want to discuss like reasonable compensation because I'm assuming a lot of you will be S corps. You need to pay yourself a reasonable salary. When you're 100% officer of the company, you're an employee and you're an officer, which means that you're working on the business and you're also working in the business. So you need to pay yourself a normal salary. And if you don't, that raises a very high risk of audit. If you look at the 1120S return, that's an S Corp return, line 7 specifically says officer's compensation. And the IRS wants to know exactly how much you paid yourself. If line 1 is about $100,000 and line 7 is very low, there's an automatic audit risk. I mean, there's an automatic calculation in the IRS system that will send you a letter and tell you, oh, you didn't pay yourself, let's have an audit. And they would ask you a bunch of questions, which most entrepreneurs won't know how to answer. They're going to ask you, oh, what degrees do you have? How many years are you doing this? How many hours are you working? And they're going to say, okay, you know what? I'll pay you $50,000. That's what you're worth. And then they're going to backdate the payroll and you need to pay taxes, fines, and file those payroll returns for $50K a year. So it's better if you tell the IRS how much you're worth. And some people say it's like 20 to 30,000, depending on how much money you're making, but you need to pay yourself enough for you to avoid IRS risk of audit. Any questions coming up?
Yes.
We have one question that came in. It says, if we have a home business and we get a business internet, are we allowed to also use that for personal use, or would we have to have a separate personal internet service?
So no, you do not need to have a personal internet service. And what you could do is, let's say your internet is $100 a month approximately, and you use you use the internet for 80% for business and 20% for personal. You should only deduct the business use only. So it would be $80 a month times 12, and the 20% is what you're not going to be deducting.
Thank you.
And most entrepreneurs are always working for business. Even if you're on Facebook, you're always looking for clients. You're always, on the go. You're always thinking of how to do well. I would say 80% is fine for you to deduct the internet service, depending also how much money you make. If you're not making that much, then you need to justify why the internet is, why you're taking such a big deduction. If you are making enough, such as, 30 to 40K and you're booming, then I would say 80% is fine. Okay?
Yep.
Okay, perfect. So before hiring employees, in New York State, it's required that you have workers' compensation insurance. Fines are $2,000 every 10 days. And I'm not going to really touch a lot on this because most Amazon or e-commerce businesses, they're virtual. They don't have any employees on staff. But for those of you that have a brick and mortar location, You want to make sure that you always have workers' comp insurance. It's not it's required. It's really mandatory and you must have it. I had clients in the past who their accountant said, oh, I'm not an insurance agent. I'm not going to tell them that they need to have workers' comp insurance. And then they get a bill of $100,000. So they do. I had a client who got a bill of $111,000 because their accountant said, I'm not an insurance agent and I'm not going to tell them. Your accountant should advise you on all areas, even if they're not an insurance agent. They should tell you to go look for one and help you in all areas for your taxes. So next, payroll taxes, forms that you need to fill out if you hire a employee in-house. So you would need a W-4 form. That's what you need to give them, an I-9 form. And again, these are just forms if they are on a W-2. Now, if you hire an independent contractor in the U.S., like such as a virtual assistant, you always want to make sure that you get a W-9 from them. They must fill one out before they work for you. And this is really important because at the end of the year, when you do your bookkeeping, you're going to see and you're going to check how many individuals are you paying more than $600 to. And the individuals that you paid more than $600 to, you must give them a 1099 at the end of the year. There's no exceptions. And if you don't do it by the deadline, which is January 31st, you get a $100 penalty, I believe, for each 1099 form. So you have to make sure that you give it to them and a W-9. This is really important for all independent contractors that you pay. Now, a lot of people ask me, a lot of entrepreneurs ask me, if I'm paying a corporation, do I need to give them a W-9 form? No, you do not. If you pay a personal name, let's say you paid Rachel Mikolov, you paid me, you would need to give me a W-9 before you pay me. If you paid my company, Empire Tax, you do not need to give me a W-9 because if you go out to Staples or Amazon or whatever, if you make these purchases, you're not going to ask them for a W-9 form. They are independent. Okay? Other important information, payroll returns are due every 3 months, not every quarter. New York State charges $1,000 fine for every quarter. So you could get up to $4,000 penalty for filing late. And my personal suggestion, don't hire a payroll company to do your payroll. You could hire a payroll company if you have like more than 40 to 50 employees, because most accountants won't do that many employees. But don't hire a payroll company. They really do data entry. They put in the hours that you're being paid, and they're putting, the $10 an hour, 10 hours a week, $100. They help you pay the most in taxes. And I've saved so many people money accountants have saved so many people money by just doing payroll in-house. And if you want, I could elaborate on that, but I don't know if they want me to. If they want, just let me know. I could elaborate how, doing using a in-house accountant is much cheaper than using a payroll company. If anybody wants, I could elaborate.
Okay. We'll look and see if anyone's interested and let you know because we're still on that delay. So it'll just take a little bit for them to say. Because I know that a lot of people or a lot of our clients, they do use VAs from the Philippines, or they might have people come in and prep for them. So that's something to be aware of.
So that is deductible. That's fine. If you have any overseas people, you don't need to give them a 1099. Okay. And you don't need to give them a 1099, and you just deduct it. I would recommend using Upwork or Odesk or any of these companies. So you're paying directly to a company, and if you do have a Department of Labor audit, they're going to see like Upwork or a company online, and they're not going to question you. Okay, that's what I would recommend. Because a lot of Department of Labor, especially in New York State, believe it or not, they're so behind. They don't understand that we use people overseas for a cheaper rate. And you would have to prove that they're in the Philippines. There's just more paperwork to prove if you're paying an individual. And the first thing that they do is look at all the checks when you have a Department of Labor audit. Okay, or you could pay PayPal, and then, if you pay PayPal, you should be fine as well. You're not going to pay, I think a lot of people in the Philippines, you just pay PayPal. So that's fine because you're paying PayPal instead of Upwork or whoever.
Yeah, that's what we normally recommend them to do, to pay through PayPal.
Yeah, that's perfectly fine because then PayPal will take care of it. Okay, so the next slide is know your deadlines. Okay, so this is a sales tax deadline. You have to make sure that you are registered in your state to collect sales tax. Now, if you're purchasing an item and you're shipping it to Buffalo, let's say if I'm in New York City and you're shipping it to another county, you need to charge sales tax on the item of where you're shipping it to. And I believe Amazon does it because when you put in the address, they charge the sales tax based on where the person is. Is that correct?
Yes.
Okay. Okay, perfect. So they do that for you.
Yeah, it's to specify it's for anyone who, like for instance, where we reside in New Jersey and where our business is in New Jersey. So any sale that gets made within New Jersey, we collect sales tax on those.
Right. Okay, perfect.
Sales tax paid for there.
Okay, but then like in New York State, let's say you still need to report the gross sales. And, you know, a lot of people think, oh, my business is online. I don't need to report sales tax. And every 3 months I don't need to report it because they're shipping out to different states. That's a myth. That's wrong. On the sales tax return, if you look, there's 3 categories. And what they ask you is gross sales. How much do you make for 3 months? For the quarter, how much did you make? How much of that was taxable, which means that only sales in Jersey, for example, or only sales in New York, which would be taxable because that's in your state. And how much of that was non-taxable? So the non-taxable items would be items that were shipped out of state. They still want to know the breakdown, and you have to report it every 3 months. Okay?
Mm-hmm.
So next tip. I don't know. I believe a lot of business owners are sole proprietorships. I've heard a lot of people are sole proprietorships. So if you are a sole proprietor and you are not a corporation or an entity and you're just starting out under your personal name, I would recommend for you to get an EIN number, even though you're working under your name. And it's free. You could go online, go to irs.gov, click on the keyword or search for keyword EIN. And get a free EIN under your personal name. And it's also going to ask you in the application, why are you registering for an EIN? Do not say for payroll purposes, because then they're going to expect for you to file payroll returns every 3 months. Say that you're opening a bank account. There should be an option on there, opening a new bank account. And with this EIN letter, go to the bank and give them your EIN letter instead of your social. And if anybody asks you to fill out a W-9 form, you do not need to give out your social. You could give them your EIN number, even though you're working under your personal name. Okay?
Yes.
Okay. So just stop me if anybody asks any questions.
When we have people that are starting up their business, that's also something that we recommend for them to do as well. So
okay,
that's
perfect.
Good information.
Yeah, so it's free. You don't need an accountant to do that. Get an EIN. If they have any questions on how to fill it out, they could always ask me, but always use your EIN because there's so much identity theft and we just want everyone to protect themselves. Okay, the next tip is pay your estimated taxes payments quarterly and not at the end of the year. So we have clients, let's say that, that come to us, new clients, they come to us, let's say in March because they need to file their taxes. And all of a sudden, they're making like $100,000 gross. Their expenses are $40K or whatever, and they have a huge profit, and they deducted everything that they could possibly think of. And now they owe, I have a lady, she owes like $17,000 in taxes, and she didn't know that she was going to owe that much. So even if she owed $10,000 or whatever, it's always better to pay the taxes every 3 months. So let's say for easy numbers, you owe $10,000 at the end of the year. Wouldn't it be better just to pay $2,500 every 3 months? And, it's going to total up to $10K at the end of the year. And if you overpaid, then you'll get a refund. If you underpaid, you're just going to pay the difference. So and then it goes back to bookkeeping. If you know your numbers and you know your net income, then you pay taxes, you pay your estimated taxes on the net income, and so you don't have a huge surprise at the end of the year. And just for the record, I don't know if am I going to be am I recorded, by the way?
Yes.
Okay. So just for the record, like I want to give them the dates. The first quarter of estimated payments is April 15th. That's the first quarter. The second quarter is June 15th. Third quarter is September 15th. And fourth quarter is January 15th. And I always recommend don't mail it on the 15th, mail it on the 1st. So if you want to pay your third quarter taxes, estimated payments, don't mail it on September 15th, mail it on September 1st. Make sure on the memo you put third quarter estimated taxes, and then put in your SSN number or EIN number on the memo. Make a copy of the check or take a picture with your phone so you have a record of it. And sometimes, guys, believe it or not, the IRS loses checks. So if you're mailing the check on September 1st, on September 20th, 20 days later, put it on your calendar and say, confirm that IRS cashed my check. And because you don't want to get a credit at the end of the year thinking that they cashed it, and they never did. So you always want to follow up and make sure that they cashed it. And always, by the way, another thing that I've seen the IRS do, a lot of people make out the check, the check date is September 15th, even though they mail it on September 1st. The check date should be September 1st. If you put September 15th, they most likely will give you an estimated tax penalty. And because they think they're going to assume that you mailed it on the 15th, and they don't, it takes them a very long time to process these checks and payments. So reduce risk of your tax return, incorporate your business, hire a bookkeeper to keep track of your income and expenses, and please don't pay too much money for it. A typical bookkeeping, service should be about, I'm thinking, I don't know, $150 to $200 maybe, depending on how many transactions you have. I've seen a lot of bookkeepers charge $300, $400 just for bookkeeping, and that is just a complete ripoff. Please don't, save your money. Have a reasonable salary, and owners must be on payroll. If you're a multi-member LLC and you're not taxed as an S Corp, you are not allowed to be on payroll. You are not allowed, an ADP or any other payroll company are not going to tell you that. Your accountants will tell you that because payroll companies don't care. If you are an S Corp, you need to pay yourself a reasonable salary. And if you hire a payroll service, they won't tell you what a reasonable salary is. Accountants guide you and tell you what reasonable salaries are. And owners must be on payroll. Don't deduct high meals and entertainment expenses. And if you do, make sure you have the actual receipt. And there's 5 things that you need in order for you to deduct meals. One is you need to have the date, which is always on the receipt, the amount, which is always on the receipt, and the amount, the date, and who you ate with. So you need to know who you ate with, what you spoke about, the name of the company, the name of the restaurant, the date, and how much you paid for the meal, which is always also on the receipt. You need to physically write, went out with Rachel, spoke about taxes, and that's good enough. Or went out with Sam Cohen, spoke about business, whatever. I don't know. But, you just want to make sure. So if the IRS ever questions, because that's the number one biggest items that the IRS looks for. Reduce higher, and then I think that's a continuation. So don't deduct high travel expenses, file your returns on time and never late. If you ever need an extension, file an extension on time. March 15th is the corporate deadline. April 15th is the individual deadline. You cannot file an extension after those deadlines. It must be on or before those dates. File your sales tax and payroll returns on time, which is quarterly. Always pay your taxes on time and do not have a large balance due by paying your estimated payments. If you do have a balance due, it's fine. Always call the IRS, and I can give you their number, 1-800-829-1040. Call them and say, hey, I owe $10,000 or whatever it is. They'll put you on a payment plan every single month. They'll make you fill out a 9465 form. You'll fill it out. You could fax it over to them or have your accountant do that for you. And if you don't know how to do it, hire someone. But they could always help you, be on a payment plan. And I always recommend if you owe the IRS and state money, at least pay off the state because that's a smaller balance. And the states are always more aggressive. And be on a payment plan with the IRS. And if you can't pay $500 a month, don't tell the IRS that. Put on the amount $100 and voluntarily pay more than what you tell them. So even if you could afford $300, say $100, say what is the lowest amount that I could put on a payment plan, and always pay more, because you never know if you may have a bad month. If they say $100, you're not allowed to pay less than that. You must pay the amount that you told them. And income and expenses must be proportionate. What I mean by that is, if you made like $30,000, you can't have a $20,000 one line expense. It has to be proportionate. It doesn't make sense if somebody made $30K and you have $20K worth of travel expenses. It has to be broken down. Do not use round numbers. That's another thing. Many people prepare their return and I see round numbers, $5,000, $3,000. Those numbers look fake. They look estimated, and that's another risk of how the IRS knows that you're estimating the numbers, and they know that they're going to audit you. They're going to audit you because of those round numbers. Okay, I don't want to advertise myself. So special offer, and that's it. I'm done.
All right, cool.
Excellent. Thank you.
You're welcome. I hope I helped everyone here. Hold on. Where's my screen? Hold on one second. Oops.
You can just end the
Just
screen.
turn off the screen share.
Okay, stop sharing.
Mm-hmm.
Okay.
It's going to be a 3-second delay.
Okay.
Up at the very top, it'll say turn off screen share.
Okay, hold on one second. So webcam disabled while screen sharing. Turn off screen. Oh, I think.
Yeah, you just gotta confirm. Okay. Yeah, you just have to confirm it.
And then you'll just have to. There we go.
Yeah. Thank you. Okay.
As a 2-member LLC, I elect for S Corp at the beginning of the year. Is it recommended to take salary?
If it depends on their income. So if you made no income, then the IRS understands. But it's always recommended. As a 2-member LLC elected as an S Corp, you're required to be on salary. You need to pay yourself, because even if your business is profitable or not, no employee will work for free. That's what the IRS says. If your business is at a loss and you hire any individual for $10, $15 an hour, it does not matter. You need to pay them whether your business is profitable or not. And that's the IRS's view. So even at a minimum wage, you're working 15 hours a week, $10 times 15, pay yourself something just to reduce those IRS red flags.
Okay. And then just a question, in-house question. Someone missed the webinar, and they asked if there will be a replay available. There will be. We just have to edit this, and then the replay will be available. Okay, do you guys have any other questions at all? If you do, put them in the chat, and we'll answer those. While we're waiting for those to come in, I want to thank you so much, Rachel, for coming and talking with us. This was a lot of fantastic information, kind of reinforcing some of the recommendations that we give them when they join. So this is excellent.
Thank you. Thank you. I really hope I helped everyone here. And I love what I do. This is my passion, helping business owners, and any questions that they have, they could always email me, or I could always do this again. I'm always available. Excellent.
Well, I'll definitely keep that in mind, because after people see this replay, they're going to probably want you to come back. We've actually got a couple more that came through. I've been paying my trainer from my business account. Can I put it down as a benefit? Adele, can you specify what that trainer is for? So while we're waiting for her to clarify that, when paying estimated taxes, if we are LLC, we really should be paying estimated taxes as entity, or pay and reference our social. On your individual. So when you're a multi-member LLC or an S Corp, you get a K-1 at the end of the year. So say you made $100,000, your expenses are $60,000, and you're 2 people on the firm. You're 2 people in the company. So your net is 100 minus 60. Your net is $40,000. Now you're going to get a K-1. One person is going to get a K-1 for $20,000.
The other person is going to get their K1 for 20K, and you split it according to your profit sharing, and you need to pay the $20,000 as your individual. You pay estimated taxes on as a individual, not a corporation. And the form is 1040 ES, I believe. Yeah, 1040 ES. And every quarter you must pay that under your personal name.
And then I have a clarification for that other question. She said her physical trainer, she's been paying them from her business account. Can she put it down as a benefit?
No, because I mean, that's like you can't like a body trainer, like a personal trainer. I'm assuming.
I'm gonna go out here on a limb, and
Okay.
They do a lot of RA, which is going from store to store shopping.
Okay.
They are an older couple who have some issues, so the physical trainer might be along the lines of just helping with joints, maybe. Adele?
I mean, that would probably be a personal medical expense, but not a business expense because that's not directly related to their business. Unless they hire a shopper who will, it depends on how they classify it. So you have to be really creative with the IRS. If they ask, who is this personal trainer? And they say they hold my hand and they walk me to all these stores. That to me sounds medical, a medical reason. If they say I hire a salesperson, go from store to store, that's a salesperson and that is deductible on the business as an independent contractor.
Okay.
So it depends how you
play it.
Yeah.
The next question that we had is I had my lawyer recommend a C Corp so that I can reinvest more of my money back into the company. Have you seen a benefit to the C Corp?
It really depends on his specific situation. Most business owners are not C Corps. And that is a reason why if a business owner wants to be a C Corp because he wants to reinvest the money into the business, then I understand why his attorney told him that. But most attorneys don't give advice for tax purposes. They give advice for legal purposes. So you always want to make sure that you go to an accountant because you want to make sure that you're saving the most in taxes and you're being protected as well.
Okay, and then the next one, they want to know if you could share your email or contact info so they can reach you. And do you work with people outside of New York?
Yes, I do. So I'm licensed by the IRS and I work with, and that means that I have a federal tax license and I have a license to work in everyone in 50 states, anyone that's a U.S. citizen, anyone that has a green card holder. I have clients in China and India that, work overseas, but they're U.S. citizens and they need to file their returns. My email is Rachel, Rachel, at empiretaxusa.com. And my phone number is 212-300-5776. I'm sorry for not mentioning because I hate being salesy. I hate that. That's not my thing. I offer lots of value. And if anyone asks me a question, they could always email me and I will help them as much as I can.
And I'm going to write this down myself, Rachel, in case they ask. You said at Empire Tax?
Yes, USA.com.
And the phone number one more time?
Sure, 212-300-5776.
Okay, so if anyone needs that, you can email support, and I'll have that information as well.
Thank you, Melissa.
You're very welcome. I'm going to give you guys just a little bit more time to put in any last-minute questions. While we're waiting for you guys to put in any questions, I'm going to do the drawing for the book. So this is for Sam's book, Mastering the Art of Success. I should have had it so I could show it to you guys. He changed it to his profile picture, so you'll see what it looks like. Run, Irene, run! Irene is gonna go see if we have one to show you guys. I put everyone's name into this auto name generator, so it's unbiased. I'm not gonna pick any favorites here. So here I go. Figures. Adele.
Adele, no way.
Adele, you are the winner.
Wow.
So you will get a copy of Sam's book. Irene will be contacting you for your address so you can get that. Adele. So if you guys have any questions, make sure you put that in. We're going to end the webinar soon. This was some fantastic information. Thank you, Rachel, for taking
You're
the time
welcome.
out to help us with this. This was excellent
I
information.
hope it was.
It is. Some of our brains are hurting.
I know. Sorry.
and but it has have a lot to work on. Make sure you put those numbers and things down, those dates, mark off those important dates, so that we can don't miss those. The IRS scares me personally, so I want to do everything I can to keep them happy. So definitely, some of you have a lot of work to do.
I also have a small business guide that summarizes everything I spoke about. So I could share that with you and you could give it to everyone. It has all the deadlines, everything that, a brief description of every single entity, all of the expenses that could be deductible. I'll actually work on something that will focus mainly on Amazon business owners and just, create a small business guide for Amazon, e-commerce businesses. So if you give me till Monday, I could send it to Irene and she could just forward it to everybody.
Excellent. That would be greatly, greatly appreciated.
No problem. I could do that.
Speaking of Irene, she seems to have the book behind you. The show.
Yay.
So this is the book.
Wow,
it's not
awesome.
backwards for you guys.
No, it's good.
No, it's perfect.
Sam's bio on the back. I had to edit it. I don't think I get any credit in here, but that's okay. My feelings are hurt. I'll let him know. So thank you for tuning in, everyone. Thank you again, Rachel. We look forward to having that information, and people are probably going to start asking you 1,000 questions.
It's okay.
So thank you so much. Thank you for tuning in, guys, and have a happy Friday.
You too. Thank you. Bye. Happy Friday.